This is a trading strategy that works on every single market that has enough volume, and I'm going to show you on the ES 2000 tick chart, but you can use this on the NQ, crude oil, any sort of market. And what you want to do is start off by mapping out the overnight price action when you come in for the day. So you can see here, we had basically a range. We had the highs, the lows, and we were going in between this range for the most part until we broke out the bottom. Now what we want to do is not assume that the breakout is going to succeed. We want to wait and see if it does before we start taking trades and shifting to a trend. So what I have here is this price action starts moving down, breaks out the bottom, goes further, and then as you can see if I zoom out, it kept on trending down. So what we want to do when we can confirm that the price action is in fact going lower is we start drawing our trend lines. And we can start with this trend line here, which we have from some of these swings. This is a wider trend line going lower. You can also draw some of your shorter term trend lines like this here, because sometimes you get shorter term trend lines or tighter channels within larger channels. So what we want to do is make sure that we're mapping these out. And we want to, I'm just going to draw out some of these here so that you can see this. So we're going to draw this one. We're going to draw this little short-term up channel too. We still want to be aware of little up channels while we're in the downtrend. But overall, we know that we're looking for shorts in this downtrend, especially after we broke out of this range and we didn't come back to it. We kept going lower. So when we kept going lower and we had our confirmation of this swing, and this swing in our bigger downtrend, we knew that we had a larger downtrend and we can look for good short opportunities. So what we want to do after we have this, we don't want to just take random shorts. We want to wait till we have a really nice setup. And so what we're going to look for is when we have legs of correction. And so the first leg is going to be right here. So right here we have a one leg up and we have a pullback. We have a first entry to go short, pull back, and then this one goes short, but the problem is the bar is too bullish. So what we want to do is make sure that we have a few things working. The first thing is, do we have an established trend? That is checklist number 1. 1, 2, 3 swings. We have an established downtrend. So yes, we have that going. Step 2, are we in a short-term up channel? We want that to be no. We don't want to be in the short-term up channel looking for a short. We want to wait till it has a close outside and it's already made a new extreme. We want to have 2 legs of correction before we take our short, because the market usually moves in 2s. So the first thing is we have our downtrend. The second thing is we are not in an established uptrend. The third thing is we have 2 legs of correction. And then the fourth thing is we need to have a strong bearish signal bar that closes in its lower 1/3. In this case, we don't. This is a bullish bar, so we don't have a trade there. Here's another one. This one is very micro, but you can see here, moves up, it comes down, moves up, comes down, but this is a double bottom, so it's not really exactly legs, but this bar is kind of neutral. It's still in the uptrend, so it doesn't fit the criteria. Then we look over here. What do we have here? We draw our short-term uptrend like this. And what do we see? A close outside, and it makes a first attempt lower. So we have a leg up. First attempt lower is a first entry. Pull back to the key entry point of the trend line, which is our final key here. We want to be off the key entry point. That would be checklist number 5. And what we get there is a bearish bar that closes and gives us our second entry short. So you go short 1 tick below this bar, stop loss goes 1 tick above, and you can ride this one to the lows. You can scalp out and leave a runner. There's a lot of ways that you can play these. And when you're in a downtrend like this, you can expect to catch some really nice runners. And those are always really good setups for me. So I just wanted to show that is how you would catch this in a downtrend. Now in an uptrend, you would play it exactly the opposite. A lot of times we get days like this that start off as a range before they become a trend. You're going to see this pretty regularly. And you can look at random days of price action where this has kind of played out. If I just zoom out a little bit, I'm sure that I could find some. Yeah, I can even see some here. Like if you zoom out and go to just a random day, this one actually had a move up, but then it was kind of a range that turned into an uptrend later. And you can see that one had a lot of opportunities. And this happens pretty regularly. We see it time and time again. And so what you want to do is just make sure that when a breakout of a range happens, a lot of breakouts will fail. So you don't want to just go with it right away. You want to make sure that you establish a new trend and that the range day is turning into a trend day. And that is a key to understanding price action and the context. So check that out, chart it out on your chart. And again, this will work on all different channels, all different markets. In this case, I'm looking at the ES futures market on the 2000 tick chart because I am a scalper and that is what I trade. So if you want to learn more, go ahead and check out the link in the description and you can learn exactly how I have these strategies that I take every single day.